From the land grant University in Urbana-Champaign, Illinois, this is the Closing Market Report. It is the 28th day of February 2025. I'm Extension's Todd Gleason. Coming up, we'll talk about the commodity markets with Mike Zuzolo. He's at globalcomresearch.com out of Atchison, Kansas. We'll revisit a conversation we had with Jerry Gulke last week for our Commodity Week program. He'll join us with an update on his thinking as it's related to the price of corn. And then as we close out our time together, we'll discuss the weather forecast too. That with Eric Snodgrass on this Friday edition of the Closing Market Report that comes to you from Illinois Public Media, where right now today you can still get pre-registration pricing for the all-day Ag Outlook. That's just $40 for next Tuesday's event at the Beef House in Covington, Indiana. Should be a great day. We hope you will join us then.
Todd Gleason's services are made available to WILL by University of Illinois Extension.
March corn for the day settled at $4.53.5, 11.25 cents lower. The main contract down 11.5. It settled at $4.69.5. December at $4.55, down 6 3/4. March soybeans 11.25 lower, $10.11.5. The May at $10.25 3/4, 11.5 lower. And November soybeans down 12.25. They finished at $10.29.5. Bean meal, 80 cents higher. The bean oil, $1.22 lower. Wheat futures soft red at $5.37 in the March, down 9 3/4. The hard red at $5.58 1/4, 13 cents lower. Live cattle futures in Chicago at $192.65, $3.47.5 lower. Feeders down $2.55 at $2.73, and lean hogs at $83.67.5, 70 cents lower on the day. The crude oil at $69.84 a barrel, 51 cents lower. Diesel fuel or heating oil at $2.31 9 cents a gallon, just about 2 8 lower. The gasoline wholesale price a penny and 4 cents lower, $2.22 7 cents per gallon. And the NASDAQ down 20 points at 20,583. Mike Zuzolo now joins us from globalcomresearch.com. He's in Atchison, Kansas. The marketplace finished lower for the day and the week. Mike, last week we talked. You said it wasn't a good week. Probably worse this week. What'd you make of the marketplace?
Worse than I thought it would be.
Yeah,
Let's put it that way. You know, I do think, though, bringing that up, Todd, I do appreciate you starting the show off that way, because we really did have a very tenuous technical picture, and we've been driven so much by momentum and sentiment this past really 2.5 years in the trade that it really is as important as the supply-demand fundamentals, unfortunately. And so this week, when we saw the big currency shift, and this would have been midweek, right up against that first day of the Agricultural Outlook Forum, when we saw that, it was a pretty big signal, especially as the day developed, that the whole financial market became more risk off. And I believe Bitcoin is now down 25% from its highs at this point. But just to give you a flavor of what risk off means, it's like everything is pretty much taking a hit for the most part. And when I saw that and the technicals and the fact that it was month end, it only made sense that we'd see a liquidation heading into month end here on Friday. Was it bigger than I thought it would be? Absolutely. In the wheat market, I think it's hard to say this, but here we are in February. We had new 2025 highs in wheat, soft red wheat, soybeans, corn in the month of February. We're within 20 cents from the 2025 low, and soft red wheat were within less than a nickel in the corn, and the meal came within 70 cents a ton of its 2025 low, all within 28 days. And this, I think, really has to be put at the feet of the uncertainty about the tariffs and the idea that the market just did not appreciate the idea that President Trump is serious about the tariffs. I will go one more step further, and we can talk about this next week more, hopefully at the Ag Outlook meeting at the Beef House. I think it's really crucial to think about this as we start March, that the drought monitor exploded in corn drought, and it increased substantially in wheat drought as well. The trade clearly walked past that. They are not worried about weather and supply fears right now. They're much more worried about weaker demand fears.
Well, I wonder, because the president really did come out and say, hey, look, we're doing tariffs, and we're starting next week. And then I suppose if the trade was paying very much attention today, watching what happened in the Oval Office with with Zelensky in Ukraine, had to tell them that this president means business. Just that's what he means, is what he says.
Exactly right. And you and I have talked about this a lot. We went from making a fresh 4-month low in the US dollar against the Brazilian real to fresh monthly highs in that currency pair as we closed out Friday. And so if someone would come up to me and say, well, look how strong beans were compared to corn and wheat on Thursday, I would say be careful about trusting that, because you're probably underneath some pretty big shifting sands. And again, that's something where we can talk about it more next week. By the way, I wanted to tell you, I looked at the corn panel meeting and I thought, here we go again. Todd put together the best, the brightest, and the baldest once again this year.
You, Sue, and Brian, right?
That's right. So no, I think once again this week showed me that wheat is our price leader, and I think in March we're going to probably see that wheat is also our weather leader too.
Right. So, how should producers think about this week as it's related to their new crop marketing? Do they say to themselves, "Oh, I should have done something earlier in the week," or is this as some have looked at it and said, "Well, this is a correction in a marketplace that's still moving higher"? Where do you put it?
No hedges in wheat. I believe we're within 20 cents of undervalue in the wheat market. And I can change my mind if we do have a warm and wet March, because I do think the trade is banking on that, because forecasts earlier in this week and last week suggest that very heavily, especially trade affiliated forecasts. I'm not in that camp. And in fact, the USDA Ag Outlook Forum today, the chief meteorologist that did the weather outlook that I caught, also is leaning now towards a drier southern plains and western corn belt this summer, which I was very glad to hear, because I'm hearing a lot from western corn belt producers about what's happening right now, that we're turning the calendar to March. So no hedges in wheat right now. I've got time to do that in 30 days. Not going to recommend a lot of hedges in corn. I will go after bought puts if I can't see some kind of stability by early next week in corn. But I don't feel like that the fundamentals right now justify jumping and kind of going off the deep end at this point. Soybeans is another situation. I mean, we have to remember that while wheat and corn stocks are very tight, 10-year tight stocks worldwide, beans are a record. Bean stocks to use are second record highest, and we're harvesting right now in Brazil. And so I think beans are, again, the place I think to start, because they didn't get hit as hard this past week.
We'll look forward to having you at the Beef House on Tuesday.
Very excited. Nice to see you, Todd.
Indeed. That's Mike Zuzolo. He's at globalcomresearch.com out of Atchison, Kansas. You know, if you listen to our programming content very often, you know that Jerry Gulke was on Commodity Week last week and made a really compelling story as it's related to being friendly to the corn market, particularly. This week hasn't been so friendly, so I thought I'd check with Jerry again to see just exactly what's happened and whether things have changed his mind or not. Jerry, thank you for being with us. Sometimes you come in at the top. I don't know whether that's what happened here and how you feel about this downturn in the marketplace for the week.
Well, yeah, and thanks for giving me a chance to redeem myself, because there isn't enough time in a day to explain it all, perhaps. But what I was looking at was been very friendly since last August, September, and for reasons we discussed in the Commodity Week, I think. But we reached a point where, and I watched what corn did the previous October, November pricing, and for 3 years we never went above that level. And when we went above that level, we hit $5.20 in corn, or July corn, which was about the same level that we reached back in May of last year. And I thought, well, we got to either plant enough acres or discover a price that makes me plant enough acres such that we get a 1.9 carryover for next year, close to 2 billion, such that the end user doesn't have to worry about running out of corn. But could we do that this early in February? And so we went there, and of course, If you preach the sermon long enough, eventually it's going to be wrong or right. But usually, you've been bullies that long. Eventually, you start looking for reasons not to be that way any longer. Well, two things happen. We did not hold that 520, and we started to turn lower, and then we failed at that level. And then we had the forum report coming out, and I did a DTN column that investigated the other policy that came out, an agency that predicts, that works for the Office of Management and Budget, that predicts what they think is going to happen for budgetary purposes only and for guidance for the president. The president gets it at the end of I think December or January, and then we get a copy of it in the middle of February, and that had an increase in corn acres based upon what they saw in the October WASDE and based upon the economic conditions as of the previous August, which I thought so much has changed that's all got to be worthless. But I thought if they saw a 2 million acre increase in corn acres that far back, and what we did in price since then, we might very well see a 4 million acre increase in corn acres this early in the year, and things aren't getting any better for soybeans because the insurance was about all but fixed about the middle of the month. So I looked at it and said, I think we got an awful downside risk here. Long term, on a monthly basis, is still predicated on being positive, but things start with the daily and then weekly, and of course then monthly eventually. But you can't use a monthly signal to position yourselves, but it does help you keep on track. So what we did is before the report came out, we were also starting our crop survey, which we do every year, and we started a little bit early, and it was the results of what we were getting in initially that concerned me a little bit, and as well as that form that could be more bearish than what we thought. And so we turned out, and I sent you a copy of it. We bought a lot of puts. In fact, I probably covered more grain in one day than I have. Maybe my lifetime. I don't know. I don't ever get that much covered in one day. But we covered an additional 45% of new crop corn by buying the July or the May 490 April puts, which are only good for a few days, but they were cheap, 7 cents. In the same token, I said, if we're going to take corn out of soybeans, then soybeans certainly aren't going to be increased in acres. So we bought calls against all our short positions in November for 12 cents at the money calls that are good for about 2 or 3 weeks. So that put us in a position, and of course, the rest is history. I just looked up, and one client who farms quite a bit of land bought 60 contracts, and he's $35,000 ahead today after 2 days. Now, the day isn't over, and neither is the season, but at least it put us in a position that I wanted to be in, to where I don't want to have to second guess and say, well, we could get a pullback and we should get a rally and we got weather coming and all that. I don't want to be in that position. I've been in that position, and it's a gut wrenching feeling when you look back at it and say, boy, I missed $5 corn, and now it's 30 cents less. I've got to, I've got to hope and wish for a draw somewhere in Iowa or Nebraska, not in Illinois, to get a second chance to get a price at that level again. So it's better to have it some protection. Never been a fan of buying options, but this is one case where it works. And I kind of liken it to when I used to fly a lot. Back in the day, you could go to a Keysok and you could buy life insurance for that day. All I wanted was life insurance from the time I got on that plane until the time I got off. So for about $5, I could buy, thousands of dollars worth of insurance. All I wanted that day was insurance that if I'll take a chance and risk 7 or 12 cents. And if that report isn't big enough to move the market more than that, then I'll sacrifice that. All things being equal, then I keep my focus and say we're going to go higher because USDA came out and said only 2 million acres. From what we saw, it's going to be way more than that. So that's the story and why we did that. That's why I look at it every day, and and we make those decisions. And I think from a marketing standpoint, you have to do that. And then you look at, for some reasons, like I mentioned, I think last week, you got to constantly look at what is it I'm missing that makes me wrong. And we saw that coming, and we had probably the biggest response for clients in a long time. Farmers seem like they like to sell more than they want to buy. So it was pretty easy to get them to react.
All right. Hey, thank you for the update on that. I know I heard it from a farmer that follows you when I was at an elevator meeting on Wednesday night, so you did this earlier in the week. Thank you for the update, Jerry, and we'll talk with you again soon.
Yep. Thanks for calling.
That's Jerry Gulke. He is with the Gulke Group. Eric Snodgrass now joins us to take a look at the global growing regions and what the weather is like in them. Hi, Eric. Thank you so much. Let's start here in the United States. Can you begin with river levels in the Midwest, in the Mississippi River Valley? Because they do differ from one place to the other pretty dramatically, I think.
Yeah, they do. And I think, especially this time of year, the river levels are going to give you a clue as to how well water's moving through the soil. Now, there's a frost line, of course, in that soil, but you still get water going through it. And the rivers are going to be the kind of test as to how things are going. So here it is. In the last 2 weeks, we saw near historic flooding in parts of, even Missouri, going into parts of Kentucky, Tennessee, all the way over to Virginia. So the Ohio River has been flooding. So all that water gets into the Mississippi there at the very southern tip of Illinois. And then if you check it at Memphis, in the last 3 weeks, the level of the Mississippi River at Memphis has come up over 35 feet. Now, what's interesting is you just take a short drive north of there, come back to St. Louis, and the water levels this morning in St. Louis were 1.5 feet below low stage. So there's essentially, if you want to think of it this way, there's about a 30-foot difference in the water levels in Memphis versus St. Louis. So here's the problem. The Missouri River feeds into St. Louis. The upper Mississippi feeds into St. Louis. And if you've seen, most of that area, the Missouri and upper Mississippi basin, has fall's drought still lingering. Yeah, we are a little muddy in the top 2 inches right now because of the warm-up we've recently experienced, but there's a problem of fall's drought still sitting there, meaning we've got to have a really active early spring. I'm talking March rains and storms, early April rain and storms, so that we can recover this before we have to do most of our field work and planting, which puts us in a bit of a precarious situation going into spring with drought risk.
You mentioned something with the frost coming out of the soils. Now, I bet that you also have been getting asked, because we're so warm and people are just superstitious about the weather, about late frost during the beginning of this growing season. So something in April, maybe May.
Yeah, so this is what's interesting about this pattern up until this point, Todd. It's been on this 4-week to 5-week cadence. We're going to drop the temperatures off, drop, and then big warm up the last 2 weeks. So it's 4-2, 4-2. And here we are back into a mild time period for the next couple of weeks. Now, listen, it's super windy today, right? And we're going to have temperatures tomorrow that might be 30 degrees colder than today. So I'm sorry to ruin everybody, but that's how it's going to be going into Saturday. Cold front's going to be coming through, but it's only dropping us back off into the 30s. Overall, for the next 2 weeks, we continue on the mild side of things. But there are some indicators that, again, in late March, and then about a month later, in late April, we could be dealing with another, 5, 6, 7, 8-day shot at some colder temperatures. And the late April one is the one we care about, because our typical last spring frost date here in central Illinois is somewhere around, the second to third week of April, which means if we have long extended warm time periods in between these shots at colder air, folks are going to get going after it, and they're going to get going after it for lots of reasons. But one of the big ones is the fact that we just talked a minute ago about, there's dryness that's lingering, and drought pressure could be something to think about. So the sooner you get in, the better. Now, if you want to forecast a frost event, it's very hard to do more than 4 or 5 days in advance. So even though I just told you that I expect 2 more time periods of cool conditions dipping in, one of them could be very poorly timed at the beginning of May. You get down to 36 versus getting down to 32, that's entirely different on the seed that's just in the ground. So that is something we cannot predict until we're right up next to that time frame.
Are you still thinking about drought in the summertime months?
I am, Todd. I have no new evidence to tell you that there's not still going to be drought risk coming at us from the west. But unfortunately, I think that our spring is going to be quite stormy and quite tight on planting windows. And I got several reasons for that. One, it has been already in the eastern Corn Belt. It's just going to start working its way back toward us. You need proof of that. Just wait until midweek next week. Got a big storm system ripping through the country midweek next week. And the other evidence, this is kind of fun, Todd. So in addition to the models and the analysis, you just got to talk with other folks. And there's a lot of my friends and colleagues. I mean, you know Andrew Pritchard, right? They're all those storm chasers right now. You know what they're talking about? They're talking about they're taking their chasecations. That's what they call them. They're talking about taking time to go chase storms in spring in the Ohio Valley, in the Mid-South, in what we call Dixie Alley. And none of that is Texas, Oklahoma, Kansas, Nebraska. And what that means is if we don't get big early storms in Kansas and Oklahoma and surrounding states, then the pressure that's been there, that's been, on the drier side of average, that pressure is going to continue to increase and it's going to spread. And as a result, we're going to be looking at just, I think, risk for there being drought creeping toward the Mississippi River throughout the summer months. And I just haven't been able to find evidence to convince me otherwise. If that changes, Todd, you'll be the first to know. But I think it's just one of these things where if it's sitting there, we have to pay attention. Because, I mean, we do have 70% of the lower 48 in some stage of drought, including the abnormally dry category. And that low soil moisture we started off talking about just sits there as a reminder of what fall can do to the next spring weather conditions.
Now, on the subject of drought, in the eastern part of Brazil, are they developing a flash drought or drought long-term? What's happening there?
Yeah, I mean, they are. This is the first bullish story I've had out of Brazil in a long time. We have seen the subtropical high that sits off the Brazilian coast in the Atlantic move over to like Bahia, Goiás, Tocantins, Minas Gerais, these locations in the eastern side of their main growing area that have about 20 to 25% of the safrinha corn over them. So what we're thinking about here is that if this recent dry and hot time period they're in right now through mid-March, if it revisits again in about the same time at the end of March or beginning of April, well, that timing is terrible because the monsoon starts to run out anyway, which means we could be hitting that crop on its eastern side with drought pressure right about the time that it's going through pollination and then getting into grain fill. So the risk here is actually on a positive side for those of us in the U.S., but I think they're going to be watching that pattern carefully. Now, it's not the center west. It's not Mato Grosso, where 50% of the safrinha crop is grown. It's to the east of there that needs to be discussed. And I'll be honest, it could be perfectly timed with when we're planting a crop in the U.S. and be a bit of bullish news at that point. So we got to watch that carefully, and it needs to come back a month from now.
All right. Thank you much. We appreciate it.
Yeah, you bet.
That's meteorologist Eric Snodgrass joined us on this Friday edition of the Closing Market Report that came to you from Illinois Public Media. I hope you will join us at the Beef House Tuesday of next week for the All-Day Ag Outlook. Details of that meeting are online. Pre-register today at willag.org. Pre-registration pricing closes at midnight tonight. I'm Illinois Extension's Todd Gleason.